Hello, everybody. I hope everything's working today. Somebody shout at me if it's not. A little bit of a rush. Today, we're going to talk about the digital paradox. We're going to touch on a whole bunch of stuff. Maybe a little surprise for Bitcoin. People are very perplexed. It's been gone nowhere for a year, and they want their money back, which is mad. Sorry. I can't talk. Did an emergency happening with a flood in a property. Hang on. Get rid of this. All right. Live TV, always a distraction. Hang on. Let's get into digital paradox. Thank you all for coming. But we talk about how Bitcoin could have some tailwinds. We'll talk about Tesla, comp plans, robotaxis, AI, impact on jobs. Is it real or not? Options, asset, which is Strive, the proxy, and so much more. Let's get into it. Big thank you to the mods in the chat, Shoni, and everybody else. Juggling too many things all at the same time and not financial advice. And all the questions come from Patreon. And by the way, tomorrow we're doing a fireside chat, 11 a.m. Pacific, and we'll be talking about investing versus trading and the important differences there and how to do both. You should always do both. I always say 80-20. 80% is your hodl bag, your investing bag, and 20% is your trading bag. And never let both interfere with each other. First question, though, we'll get to will be from Christopher K. Hey, James, since China and BRICS are hoarding a massive share of the world's gold to back trade and move away from the US dollar, doesn't that centralization make gold less neutral as a global monetary hedge? If one bloc controls most of the supply, it's still scarce, but no longer freely circulating. We know this shift highlights Bitcoin's advantages, yes it does, as decentralized scarcity with transparent, global, politically immune supply. So could China's push to de-dollarize with gold ironically end up accelerating the world's move towards Bitcoin as a neutral reserve asset? I like the way you think. This is a clever question. First of all, my opinion of gold, but not necessarily that of a Chinese central bank, is it's outdated, it's physical, it's slow, it's vulnerable to manipulation, powerful actors, paper traders, etc., easily manipulated by large institutions, governments to distort price, miners, God knows what they do. It's hard to authenticate. Counterfeiting and verification is extremely difficult. And if you look at the scientific process behind verifying gold, it is unbelievably tricky. It's like, who would ever buy this stuff? It's expensive, it's illiquid, it's high premiums, very difficult to unload, very expensive to store, very hard to sell, and it's very difficult to transport. I mean, there is nothing good about this gold stuff, but people love it. And it's been around for 5,000 years, so it has the Lindy effect for sure. But I do agree with you. Bitcoin has a tremendous edge for when the time comes, when governments begin to trust it more and it becomes more widely adopted. We have a whole bunch of good stuff. It is borderless. It's easily verifiable. It can be transferred instantly for free. Basically free. You can send $1 billion for $1. It's scarce. It's globally portable instantaneously, and it has full transparency. It is literally like comparing a bicycle to a rocket ship. Bicycle being gold. Anyway, some people like their bikes. I do. I like my bikes too. So I think when the time comes and the tipping point comes, when the adoption comes, and this thing really kicks off, those people who are invested in gold will have a rude awakening and think they need something better. So that's it. I agree with you. Next question is from Amakaman. If a bear market hits crypto and Bitcoin drops to 70,000, which is the target that I have in the bear market, if there is a bear market, how will this affect STRC? Will the stock price tank, or will they lower the 10% yield? Asking because I'm thinking about taking profits in Palantir and then buy STRC in a low tax account, 17% account. Interesting. So let's dig into this. And I did spend quite a bit of time looking at it, because if I make a move and I screw up, it's bad, very bad. I actually, after months of looking at it, I got comfortable. And let me walk you through my way of thinking around STRC And I currently do deploy a chunk of my cash in it as of about 2 weeks ago. And it's remarkable the return in just 2 weeks. It's like, wow. Anyhow, it is risky. Everything is risky in the markets. If Bitcoin does tank to $70, what could happen? Well, the collateral is designed to stay with 5x collateral, I should say, with all the backing of the 640,000 Bitcoin. I know Sailor bought more as well this weekend. It is designed to stay near that $100 par, and it offers priority dividends and no margin calls or any forced redemptions, which is good. It's top of the food chain when it comes to liquidation. And there could be, in a very bad bear market or a big Bitcoin dip, it could make people nervous, and it may dip to $95 to $98 in a risk-off sentiment. Not collapse like Bitcoin could. Bitcoin could have a 30, 40, 50% haircut. This thing would only shave off a couple of dollars. But the built-in $100 accrued dividend redemption clause provides for downside floor. And people will get that. And the yield dynamics, current yield is about 10.5%. It adjusts upwards automatically if the price falls. So you could be earning 12% at $95, and that will stabilize the demand, which is magical. And monthly dividends are partly a return of capital funded via operations, etc., debt, issuing stock to pay it. Now, the key risk, though, would be in a prolonged bear market below 50K, this could strain MicroStrategy's leverage, even though they say they have no risk of liquidation until Bitcoin hits 20K. It would make the markets nervous. It would make issuance kind of trickier. Liquidity could become limited, etc. But at the same time, it's worth the reward. I deployed for that reason. Now, I also hold MicroStrategy at a very low cost basis because it's like I call it my anchor baby. In case something kicks off with Bitcoin, we don't know when or where or how or if it'll ever happen. But Michael Saylor did say something, and shout out to Vivek who shared this. Michael Saylor says, if people knew what I knew, Bitcoin would go to $10 million tomorrow. And he said that with extreme confidence. What does he know? You know, he's been smiling since November 2024. And we know it's scarce. We know there's like 63 million millionaires on Earth. There's only 15 million Bitcoin. If every millionaire decided to buy one Bitcoin, they wouldn't have a snowball's chance in hell of getting there. They can't. They can't. Not, you know. And this day will come. The supply crunch will come. I don't know if it's in 6 months or 6 years or 10 years, but it's going to come. And therefore, I have my anchor baby in case it does. So thank you for the question. Next question is from Profits1. And I hold Tesla in a secondary IRA account with a cost base of $219. Nice work. Would it be a good time to get half of my gains and use it to buy 2 deep in the money leaps for January 28th to increase my exposure, which will get me to my target number of shares? That target, everybody, should be, for years I've been saying 300 shares would be life-changing, saying this since 2022, maybe even 2021, and I hope everybody's doing that. So let's look at some numbers. And what I'm going to do is my usual analysis with a twist. I'm going to show you how you can find the best option to buy, but also tell you not a good time to buy options. So first of all, these are the most highly traded leaps on Friday in the marketplace. And you can see some of the gains on some of these leaps. We've got different strikes, different expiration dates. We just look at the calls and the price. So for example, the top one, $500 strike for December 18th, 2026, which is about 13 months from now, would cost $104. So you need Tesla to hit $604, $605 before you even break even. And the stock price now is $450. You've got other ones there. The January 21, 2028 is $940 strike, costs $74. You need Tesla to be over $1,000 for this thing to break even. Again, it needs to 2.5x. But let's look at these numbers and I show you my calculations and how it works. Very simple. I'll actually share this spreadsheet later on Patreon so people can play with it themselves and plug in their own options. It helps you analyze it really easy. You've got your strike, you've got your last price, then you have your break-even point, and the delta to the break-even point from the price today, and then the time to expiration. And you put all that together, you can create this fancy little model, which is actually very simple. It shows you the move that needs to happen, and it calculates the compound annual growth rate for that move in the time frame. So what you can quickly see from this, you want a CAGR to be low to even have a shot of breaking even on these leaps. So what do you see? The best one is the January 15th, 2027 $400 strike. As I always stress, if you're just buying leaps, try get half intrinsic, half time value. That means you go in the money on the strike. You go to the 400 and then you wait for the price to go up. So this has the least amount of CAGR required over the next 439 days of 20.8%. The worst is the $700 strike. This is only 439 days as well from expiration, but you need your delta to break even needs to go up $311 because your option is the 700, which is out of the money. The premium is $61.78. Therefore, it needs to go to $761 less 450 gives you 311, and that CAGR is 55% return. Anybody buying this needs the head examined. It's a fool's errand. Very expensive. Even the one with the 940 strike is better value for money. So that's the simple way of doing it. Now back to your question, would you do it now? No, you can't. They're too expensive. The cost of these leaps is way too high because Tesla has been on a rampage, and we'll talk more about that in a minute too. So you just got to wait. You got to wait for dips. You got to wait for, if not low volatility, not after it's gone up, nearly 80% in a year. That's the problem. So hope that helps. Hold tight for now and wait for the right time. Next question is from Dean B. It seems like you only roll calls every 6 to 12 weeks. Is there a reason you aren't doing it more often? Is it because there's not enough liquidity in the weeklies for you to roll that amount of contracts on a 10 to 15 day cycle? If one is rolling more frequently, can they be less concerned about nailing relative tops? So there's a couple of reasons. I don't do things based on a calendar. I do things based on TA. That tells me when I can sell a covered call. And as you know, I don't jump in front of a rolling freight train, which Tesla can be, especially after the rampage lately. But I use mean reversion to tell me when to sell a call. And here you got 2 standard deviations. Last time I sold the calls on Tesla. That was my signal because I wait and I'm fine with the premium, but I don't want to lose my bag or have to be forced to chase up. I'll wait until the stock is really toppy, use a mean reversion to the upside, multiple standard deviations. Then I determine when I come back or not. And just a quick reminder as well, Tesla has saved our year. By the way, I just want to say something. The world is upset. Bitcoin's over $110,000 and everybody's upset. This is a terrible year, worst year of my life. I'm so sad. I wish I never got into crypto or anything. But look at this, okay? Bitcoin over the last 1 year has gone up 53%. And people are still complaining. IBIT 52%. NVIDIA 46%. Gold 42%. Strife 29%. MicroStrategy, yes, has had a bad year. But remember the rampage it's done since 2022? 3,000%? Well, that's what you need to take into account. So it is slowing down. But Tesla has won the year, saved our year. And that's why you need to do rotations. Rotations, very important. And the other reason I am very careful with selling calls on Tesla, because I know from experience from being in the stock since 2017, sometimes they can do things that aren't expected, and you can lose your bag by getting called out. And I don't want to lose my bag. I'm fine with just the returns on the stock itself because my leaps have so much leverage in them and I got them so low. It doesn't matter. The puts I sold they're all beginning to expire to nothing and use less margin. And that's the game I play. And I do the third leg of stool. I sell the calls when the time is right, but I'm not doing it every 2 weeks. I do it at the right time when the chart tells me. Hope that helps. Next question is from Papa Jos. Really enjoying your Patreon and indicators. Thanks for all the hard work. My question, with Uber's new partnership to deploy a fleet of 100,000 NVIDIA-powered autonomous vehicles starting in 2027, how does this directly compete with Tesla's robotaxi vision? And what specific risks, such as market share erosion, technological leapfrogging, or supply chain battles, does it pose to Tesla's long-term valuation and dominance in the AV space? Oh, ready. First of all, Uber is going to be hit hard by autonomy, robotaxis, cybercabs, whatever you want to call them. But they literally are partnering with the sun, the moon, and the stars, partnering with NVIDIA, Aurora, AV Ride, May Mobility, Momenta, Motional, Neuro, Pony AI, Wabi, Wave, WeRide, blah, blah, blah. Partnering with the world. How can you possibly partner with everybody? You can't. And these are all flashes in the pan. They'll all die. They're not going to make it. Let me explain why none of these competition, all these whatever will make it, including Waymo. They're not going to make it. They can't make it. It's real simple. The competition are not coming. Okay? And I'll say this with absolute conviction. First of all, Elon said he'll be making millions of cybercabs on the all-in pod. I forgot to mention that. I didn't make that as a bullet. Millions of cybercabs. They can spit them out every 3 to 5 seconds. Everybody. Okay? All these other companies, they need to buy a car, work on it for months and remanufacture it and add in a whole bunch of crap and then work with another partner and share revenue and market together. And it's like, there's too many fingers in all the pies. And when that happens and you're paying NVIDIA for chips and everything else, there's no margin left. It's destroyed. That's why years ago Tesla decided, we're going to make our own inference chip. Okay? Because we don't want to pay that money to NVIDIA. It would kill us. Now, second of all, the reason why none of these competitors will have a shot, and I hope to be around in 3 to 5 years and say, told you so, because of these simple reasons. End-to-end vertical integration. Nobody has this. They make everything. They even make their own seats. Okay? They've got a data moat of over 6 billion real-world miles to continuously train edge cases. Edge cases. That's where people die. They have end-to-end control over everything and all the data. And their iteration cycle is extreme. They've had 4 versions of version 14 FSD come out in the last 2 weeks. 4 versions. Nobody can keep close to that iteration. They got in-house batteries, powertrains, FSD, hardware, etc. And they cut costs on everything that nobody can even come close. No EV maker can even make a profit on EVs. Only Tesla. And you've got all the other fragmentation that exists in the value chain, and nobody will be able to achieve their miles. They've got everything locked in. Everything. The infrastructure, the charging, the service centers, the vehicles, the cost per mile, designing a car from the ground up where every penny is shaved off. And you think partners can even get close to this? The partners that need to buy a car from Jaguar because Jaguar couldn't sell them, so Waymo bought them and then they remanufacture them. And I think Jaguar's dead anyway, but oh well, that's what happens. It's not going to work. And again, nobody will be able to come close to this. And remember, Elon Musk plans 8 years ahead of time. These other guys are all joking around, so don't worry about that at all. And I say that with extreme confidence. Next question is from Derek M. Hi, James. Congratulations on the fantastic education you share. You're the best. No, I'm just an average guy, and anybody can do this. The reason I do it every day is because you all can do it. All you have to do is apply yourself. Quick question. I bought several Tesla calls expiring. Everybody's in the options. Good job, everybody. Made a fortune. Tesla calls expiring 2027. And to reduce the net premium, I sold puts against the position. The problem is the cash required as collateral for these short puts is locked up, and I cannot invest it until 2027. How do you manage the cash drag? Are there accepted strategies or reduced to avoid having so much cash tied up, spreads, alternatives, margins, while keeping a bullish stance? I'd love to hear. So, let's just stop. I don't know what she's eating. Licky's not even making a noise. Sorry about the noise. That's the dog. Now, first of all, you hear me talk about a mattress. Okay, imagine you buy Tesla stock in 2017 at like $15 or $16. You keep that. That becomes your hodl bag. That becomes what I call the mattress. Big, fat, fluffy mattress. And then you use that over time to do things like sell puts. On margin, not using cash. Cash is king for trading. You do not lock up your cash. Then it makes the return on investment on the deal not very good at all. So, as the assets go up, my margin goes up, which is my big fat mattress. And then I can sell all the puts I want. And that is far more capital efficient than selling cash secured puts. Also, I sell puts near market bottoms when implied volatility and premiums are very high. When everybody's pooping their pants, that's when I sell the puts. Okay, everybody wants to buy the insurance. Oh my God, Tesla's going to go to zero, and they scramble to buy these things. And that's when you just go and you take their money. Take their money. You sell your puts and you give them insurance, which you don't need because the price is going to go up. You only do this at bottoms. And as Tesla rises, the put value drops. It releases your margin back into your big fat mattress. You got the time decay works in your favor, and you just let the time do the work. It's that simple. Make sure you have margin, authority, level 3 options authority, and build a bag. That's why it's so important as well. You know, my MicroStrategy bag, why am I holding it? That's my mattress as well, that I can sell all sorts of puts against. I can sell IBIT puts against my mattress, for example. So the key is build a big fat mattress, and then you make really good infinite money glitch machine money. Next question. This is 2 questions which are kind of related. People worried about the comp plan. Everybody's worried about Elon not getting the comp plan, and then he'll leave and he'll build robots at XAI, or he'll leave the company and then Tesla's screwed. So this question has come up so much over the last couple of weeks. It's incredible. So for Patreon, I actually analyzed all of the odds, approval odds from Kalshi, Polymarket, Wedbush, Zacks, Cathie Wood, Dan Ives. And you can see the odds are very high, 92 to 98%, depending on the day for Kalshi. A little lower on Polymarket, 83 to 89. Remember, people are putting millions of dollars down on this bet. That's why I love these betting markets, because the smart money is in the betting markets. And then Wedbush and Zacks, 85 to 95% approval. Cathie Wood, Dan Ives, 90 to 90% approval. Now, let's analyze some of the data, because compared to previous votes, Elon Musk and people like the board couldn't actually vote on these things, but this time they can. All right. Now, I just want to get a little political for a second. Anybody who does not vote for this 10x comp plan, okay, he basically gets, 12% of the stock in the company if he 10x's the company. So would you give, if somebody says to you, hey, can you turn $100 into $1,000 for me and you can keep 12%, or dilute yourself by 12%? This doesn't even turn out to be 12%, it's more like 10%. Would you do it? The answer is yes, of course, every time. But the reason he's doing it is not because of the money. It's because he doesn't want to be ousted by activists, the same people that reversed his comp plan. The guy hasn't been paid since like 2018 or something. You don't want an activist judge or an activist board or ISIS terrorist organization coming after you. You don't want that, ever. And he knows that. He's seen that happen to Steve Jobs. Remember, Steve Jobs got pushed out of Apple. He got whacked over the back of the head one night in a dark alley. And then 4 or 5 years later, they come back saying, can you come back and fix Apple for us? No, Elon doesn't want this to happen, because if he's developing an army of robots, they could be turned against mankind. And that's against it. Anyway, off my soapbox, back to the $1 trillion comp plan. People think it's too much money. No, we're going into infinite abundance, ladies and gentlemen. Okay, pre-approval, 89% is going to happen. Precedent, last time we had a big vote, 77% yes, said yes for his comp plan. And that did not even include Elon's votes. So the smart investors and the retail investors and the board all know this is good for humanity. It's nothing about money. Forget money. This is abundance. This will help the U.S. build up its GDP, build abundance for everybody, universal high income, all that good stuff. That's the important thing that people forget. If you have a narrow mind, you think, oh, he's too much money already, then you're just like that judge in Delaware who's an activist. Okay, I'm really on my soapbox today. I'm going to move on. So, yeah, I think it's highly likely. You got the CalSPERS and ISIS and other funds that are just against it because they don't give a crap about the stock. They just want to punish Elon because he's not woke enough or DEI enough or whatever their excuse is. I don't know, but it's going to happen. So don't worry about it. That being said, one other final point on this. I am also very paranoid, and I don't count my chickens until they're hatched. So if this makes you lazy and not vote, don't vote. Please vote. Everybody vote. We have up in a few more days to do that. Next question. Coding Monkey. Why do you attribute all the tech layoff to AI and not offshoring over hiring from the pandemic and the general recession? These, to me, seem like a much larger impact than its current state. Great question. By the way, if you've looked at Wipro, Infosys, Cognizant, all these offshoring firms in India, they're having huge layoffs. Guess why? AI. AI is replacing the offshore staff that used to do the work. Okay, anything behind a keyboard now, anything on a keyboard is threatened by AI. So here's the view of the world. Popular opinion, if you ask all the experts, all the consultants, why is the job market sucking? One is skills gap, 5%. Recession. By the way, I just made a post on Patreon. Yes, there's a recession. I listed all the industries that are having a recession, have been for years. So that's happening too. Overhiring, 35%. Offshoring, 10%. It's a nothing burger. And AI, 20%. That's if you ask the experts. But let's turn this around. Let's talk about this. In my opinion, I think half is driven by AI. I think the skills gap is 1%. I think recession, high interest rates are hammering the markets, 19%. Overhiring, maybe 20% from C19. And offshoring, maybe 10%. That's how I see the world. But there's more important things too, because you hear so much stuff, and even much respect to Shamath and David Sachs. They say, oh, AI is not impacting jobs. Are you kidding me? Look at the top 4 employers in the United States. The Accentures, the Walmarts, the Amazons, all these guys, they're all leaning into AI so they don't have to hire and they can eliminate jobs. Look at all the jobs that are eliminated over the last couple of weeks. It's wild. And my former school, Wharton, came out and they talked about the corporate ROI from generative AI already just in the last year. 75% of firms have already had a very positive return from AI, and only 5% had a negative return. Some, maybe 20%, said it was nothing burger, nothing yet. But remember, this is wild. 3/4 are generating return from AI, which means they don't have to hire people and they're more effective, more efficient, more productive, doing more with less, whatever label you want to put on it. It's a reality. It's happening. Everybody I know is leveraging it that runs a business. Everybody. I've got a concrete guy who's writing up it used to take him like 12 hours to write a contract for customers around a contract job, yards, rebar, all that stuff. And I showed him how to do it with AI in 5 minutes. Now he can spin out 20 contracts a day instead of spending the whole weekend doing one. Okay, and he's a guy who he speaks Spanish, and he works for concrete. Okay, everybody's using AI. And 46% of the business leaders in this study use AI as well. And this is broad-based across all industries. So it's coming. And let me talk one more thing as well about how AI is a threat. I call it the asteroid that's going to hit this Earth like nothing since the dinosaur times. If that's even a true story or not, I'm not going to go there. But cognitive labor is completely collapsing. The price of AI thinking has gone to zero. It used to be $6 a thought. Now it's 1 cent. Companies are growing revenue without hiring. They're focusing more on it, more and more. S&P 500 is doing record profits, strong earnings per share, profit margins, etc. The bad news, young and mid-income workers are getting squeezed white collar across the board. Next after this, your Uber, Lyft truck drivers will get smashed by Elon's Cybercabs. That's just a reality. These times are too urgent for me to sugarcoat things anymore. Sometimes people say, oh, you're so negative. No, I'm realistic. And I'm very good at predicting what happens 5 years out. That's how I have made money. Okay. Predicting the future is the most important skill after asking the right question, which also helps you predict the future. And after the drivers, humanoid robots will come after the physical jobs. Right now, it's the white-collar jobs that are getting whacked. Then the driving jobs. Then the physical labor jobs. This is what's happening. Okay, no ifs, ands, or buts, and this will all change tremendously, rewire the way the world works over the next 3 to 5 years, if not a lot sooner. Okay, this is very extreme. Hit those alarm bells because this is something you need to prepare for. That's why I work every day. Next, from Tankist. In the rotation model, could you suggest any rules for excluding assets like MicroStrategy or stop using RT model during sideways consolidation or extreme volatility? First part. Next is from Josh Morris. I've currently built out 5 iterations of the rotation model using the assets listed below. I love your input on the ones to steer clear of. You recently mentioned avoiding MicroStrategy, which is given the recent price action was clearly the right call. That was a few months ago. I just want to make sure I'm not factoring in any other assets that should clearly be omitted. Okay, first of all, the reason to stay away from things like MicroStrategy is we're getting to the top end of the bull market. I've said for a long time, even since last year, we're 80% done, I said a year ago. Maybe another 20% left. We're still here today. Maybe another 20% left. Maybe 30% chance we're at the top. That's just the reality. You don't want to be in proxies. Proxies got hammered. I have my anchor baby proxy in case, because I don't have very much Bitcoin, but in case Bitcoin does take off, I have an exposure to it. That's my game. My goals are not your goals, as Rob from Digital Asset News says. But let's talk about this, rotation rules. The only thing you have to do, it's like flying a 747, but the most important thing is you've got to put the right fuel in the engine, which means picking the right assets that will perform well over the next 2 years or 12 months and be very volatile and have a very good Sortino ratio. So very important. Remember as well, high Sortino ratios are a moving target. What's hot last year may not be hot this year. Not everything will go 5x, 10x every year. Remember that. Also, they evolve based on recent performances, like trailing 12 months. Recalculate them, review them quarterly, use tons of tools that are out there, Portfolio Lab, Yahoo Finance, FinWiz, etc., to select your stocks and maintain superior downside protection compared to benchmarks. Okay? Focus, focus, focus on what will do well over the next 12 to 24 months. Do not rely on history. That is death. Always look forward. Another quick tip as well. If something good or bad happens to you in the past, forget it. It's all about what happens next. The past is in the past. It's just like when a company issues earnings reports. It's like people care for 10 seconds, then it's history, dead. So if you made a bad trade or you made a good trade, forget about it. It's over. Move on. Start working on the next good trade, okay? And do not lose money. Very important. What else we got here? Risk management, pair trade, position sizing, 2 to 5% per trade, and no more than 20% of your portfolio. We'll talk more about this tomorrow on the Fireside Chat as well. And Patreon, remember, 20% is your trading bag, 80% is your hodl bag, your fat mattress. Now, what I didn't analyze all of your stocks here. That's too many. I don't have the time, because when I analyze a stock, I go deep, and that would take me 5 or 6 hours to do those. I might have a look and see what I can find. But this is my new list of high Sortino ratio stocks that are beyond our typical suspects that you all know what they are as well, the Teslas, etc. Again, what's going to be hot? NVIDIA, what's going to be hot for the next 2 years? Now, I did add CrowdStrike in there. Sortino ratio, approximately for the next 12 months, about 3.1. Hood, 4.06. Palo Alto Networks, 3.05. Palantir, 4. And Rocket Lab's 4.67. Space defense will be so important. So important. Remember, this isn't a war machine. This is a defense machine. If there's a missile coming towards the US, we need some type of space protection. So sounds weird, but that's why the exposure's there. Now, I took these blindly, these 5, and threw them in the model just to see what happened over the last 12 months. And here we are. The results are in. These are the assets. We have Palantir, Crowdsource, Robinhood, Palo Alto Networks, and Rocket Labs. And if you had 50K to start with, and you did this for the last, if you just held these for the last 12 months or so, your 50K would have turned into 116K. But if you rotated with them, your 50K would have gone nearly 5x, up 355.1% return versus 132.7% return. Yes, they're volatile, but rotating is magical. You've all seen my rotation between you-know-what and you-know-what over the last 12 months and how mind-blowing that has been. Rotation is everything. You don't have to sell all your stuff, just a piece of it. Even selling 20% of your bag and rotating into something that's completely oversold can be life-changing, especially when you use leaps. That's it. It's not hard. Really not hard. If I can do it, anybody can do it. So that is the rotation model. And by the way, I haven't even tuned this in. I could get really sophisticated. I could change the time frames. I could change the loads of the assets, just 100 shares each. Last 12 months or so, nothing. 80-20 retention, sell. That's the result. But you could tune them all, like how much you retain of certain assets, how much you have of certain assets, your allocations, then you get a much better results. But I didn't even do that. But anyway, more on that tomorrow. Next, from Totally Blonde. Hi, James. Asset has significantly declined in recent times. Do you see the mean reversion as a potential buying opportunity or something to avoid? No, I exited this a long time ago, I think around $8, because I took the gains on that and I put them into CEP because I thought they were a little closer. But let's talk about proxies. Every single week, I share my proxy hodl model of the NAV premiums for all the assets. And for years, literally for a year and a half, he was saying, buy Metaplanet, buy Metaplanet, buy Meta. I said, I can't. NAV premium is 22, NAV premium is 12, NAV premium is 8, NAV premium is 6.5, NAV premium is 4. I never touched it. NAV premium is too high. Okay, when your NAV premium is high, you don't touch them. I went to the Metaplanet website to find out what the current NAV premium is, and it's dead. Maybe they turned it off. I don't know. That's always a bad sign when a company's website doesn't work. If my website doesn't work, I lose my mind. And the development team will have hell to pay if they're listening. Anyway, let's look at the NAV premium for Metaplanet from our friends at The Block. But you can see here how volatile it's been and how it always mean reverts to 1. That's what happens with Metaplanet and all proxies. Remember, if the NAV premium is high, do not buy. It's that simple. That's why I share it every single week. Now let's talk about asset. There, MNav. I calculated it briefly. I also have it in the model, but it's a bit trickier because of all the moves around and the SPACs and everything else. But currently, I see they have about 6,000 Bitcoin, price 110K a pop. They got 8.3 million in cash. Their shares outstanding 689 million. So the NAV per share is about 96 cents. So if you buy a share for $1.30, you're getting 96 cents of Bitcoin approximately. And the NAV premium, doing the math of that, current price, etc., is about 14%. It's low. But again, the reason I don't like asset is because I don't like SPACs. SPACs will spank you because they're not exactly, open, transparent with everything that they do. Let's look at asset on the ATR model. Yeah, zombie level. Trend is down. It actually has perked up a little bit for some reasons I'll share in a second. But, when you use the ATR model to tell you when to buy, when to sell, really simple. It told me to sell at 8. So I did that. And of course, all my trades are published. Now, this is a tweet. I hid the names to protect the innocent. But this is from a progressive libertarian. Why am I not surprised? At this point, it's obvious, pumping asset for his buddies in an attempt to keep the stock high enough for more warrants to be exercised. Even without an up-to-date share count, we know 1.35 is above NAV. You can find this tweet yourself. You can look it up. Just take any keywords. You can go to Grok. Why am I not surprised? Search that. You'll find the tweet. Anyway, the point is I am averaging up an asset today. I added 50,000 shares at $1.35 and $1.37, and I've bid stacked below. Please let us hands bring it down a bit further. I don't know what all this means. I'm just sharing the information. But it made me aware that there were warrants because I don't hold the stock. I don't spend time looking at it. That's it. Too risky for me. I was out at $8. Done. Next, helping animals. This is Willie, the golden-handed tamarin. So cute. He actually looks a bit like a Halloween character. And he loves his outdoor habitat, utilizing bamboo as his playground, and bug hunting expeditions. And we donated to Jungle Friends to help support care, food, shelter, and everything else. Big thank you to everybody for that. And DCA tomorrow morning. Yeah, you get you bring your questions tonight. I'll send it out after this video. I hope you all got smart. I'm going to do some live questions right now. That is the digital paradox. And the reason I called it that is because we have this opportunity to invest and make life-changing money, but disrupt our lives. Hope that on with guess who Jones too. So let's do some questions. Doc Intern, with all the prediction markets showing a high likelihood of Tesla vote going in favor of Elon, thoughts on short-term Tesla call options? Which ones look good? Thanks. Doc Intern, thank you for that question. I like the way you think, but remember, if Kalshi and Polymarket all say 90% and all the analysts say 90%, that means it's priced in. That means typically when they say, you got your plan, buddy, good luck, that means it becomes a sell the news event. Unless something big happens at the annual meeting. We don't know. I would not. I would sit on my hands. This is one of the times I sit on my hands and wait and then react. Maybe if there's a sell-off, that could be a buying opportunity. But don't expect it to pop. No. It's priced in. And the stock, I believe, will not pop until we start seeing really momentous moves that actually start contributing to EPS, because that's what TradFi needs to see before they start doing everything else. Now, all the price targets and everything else are to the moon. Shout out to Adam Jonas, $800 price target, highest on Wall Street. We're going to $800, but I just don't know when. Don't expect it by Christmas. Duck Intern again. Good karma follows charity. Everyone, please donate regularly to these less fortunate. Exactly. Help your local community. Help others. Make people more successful. Rusty Bot up in Norway. A wise man told me everything is a three-legged stool. Yeah. Your structures, your allocations, be heavily concentrated, diversify, not over diverse. Don't diversify a little bit, and hang tough. Thank you so much, Rusty Bot. And Mary Mulda, do you think BSOL is the same quality as Fidelity or BlackRock's ETFs? Looking for Sol ETF. Thanks for keeping us sane. Bitwise is a crypto native fund manager. They are the best in the business. They are the most transparent in the business. They share their addresses of where they hold stuff. They are legends. I trust them as much as Fidelity. Fidelity ETF, Bitwise ETF, they'll both be good. Watch the fees and watch the staking returns. And a big thank you as well for your super sticker, Crypto Katana, Martello 45, Athena, Formosa, Anglebax, and Crypto Last Ask Post, Buckhorn, Sylvan Muster, Soul Strider, Mary Magdalene, still have that, Signal 103, Swiping No Swiping, All Torque UK. We have a petrol head in the house, Anjo, Bitcoin Broccoli, Chaotic Coder, and DBF 430. Thank you all for coming. Thank you to the mods in chat, Sean D, T&D, K8, the whole gang. Love you all. See you all tomorrow morning, bright and early. Hope you enjoy the show. Get ready for that asteroid. It's coming. I promise you that. And sorry for not sugarcoating things, but again, forewarned is forearmed. Good night.